EzSMC beta is now officially out to all of our pro members. I'm going to be going over very briefly in this video what the new update entails. This is a brand new indicator available in the EzAlgo bundle. So this comes with access to the EzAlgo V8 and the EzOscillator. Now we have created the most simplistic price action indicator. Easy smart money concepts. Now this is for you SMC traders out there. So if you trade retail concepts, you might not use this one. But if you're a fan of smart money concepts, which has been on the rise recently, then you'll love this indicator. All right. We've combined everything that you need into an all-in-one price action tool. So let's go through the settings real quick so I can show you guys each of the individual inputs and how you can use them in Confluence to make some amazing trades. So the first thing you're going to do is come up here to indicators, go to your invite only scripts, and you should see the EzSMC beta. So once you load it in, it'll look like this by default. Now, if we go inside the settings here, you'll see that we have order blocks, right? These are institutional order blocks showing you the exact buying and selling pressure and volume for each order block created. We've also added a multi-time frame option so you can toggle on higher time frame order blocks on a lower time frame. Now this is going to be great for Confluence, right? If you're using a 2-hour order block per se, show you guys for example, you can see right here we have the 15-minute order blocks, and then you see we have these higher time frame order blocks, right? These larger order blocks, these are from the 2-hour time frame. So this is where you're going to be looking for your entries, right? Now within that higher time frame order block, you can look to refine your order blocks. Look to refine your order blocks. Here you can see we have a 15-minute order block right inside of that 2-hour order block. So right here, this would be a nice opportunity to look for a possible long position. As always, you want to wait for confirmation. Maybe you're going to go down to the 1 to 5 minute time frame to enter using the BOS and other inputs that we have, which I'll be getting into very shortly. But this is very, very important, right? Having these multi-time frame order blocks with volume as well. So you'll notice that we have these green and red bars. This indicates the buying and selling pressure on the candle that created the order block, and then this is the actual volume right here. And we also have it in terms of percentages. So you can see we have a very strong order block right here, right? 19.5% of the overall volume with all of these order blocks. Now keep in mind, we have a remove overlap feature enabled on by default. You don't want overlapping order blocks, right? So you want to remove that by default. You'll see that we have a very strong order block right here with a lot of volume with a strong move from that order block. So what does this tell us, right? This tells us that there are buyers in this area who have previously bought in here to push the price up. So you can expect another reaction at the same level if price comes down and loses this low. Then you can expect some sort of reaction from this order block. Again, going to a lower time frame for entering. Maybe you're setting a limit order. It totally depends on your strategy, but the volume is very, very important. Now keep in mind, right, in an instance like this where we have this large red bar, you can see that we also have quite a bit of volume here on this order block. This does not mean to go short at this level. Even though the selling pressure was larger than the buying pressure, we know that buying and selling pressure does not move the markets, right? What moves the markets is liquidity and inefficiency, aka these liquidity levels, right? Active orders that are in the market, and inefficiencies, aka fair value gaps, which we've also added. I'll get into that in 1 second. So if anything, this would be your prime entry for a long position. Why? Well, first of all, we have this strong order block, right? We have this strong order block followed by a sharp move up with displacement. Right, so displacement means fair value gaps. Institutions are setting their bids here and they push the price up too fast so they can't fill all of their orders. So what are they going to do? Well, they're going to push price back down to fill the rest of their orders. So this is the most optimal use case of the order block. You want to see a break of structure, right? This is our external break of structure, meaning we are in a bullish market condition with a strong move up followed by an internal break of structure, creating this order block and this fair value gap. So that is going to be your highest probability trade. Now this works even down to a lower time frame. I'm showing you guys this on the 2-hour, but this works down, to the 5-minute time frame, right? What you want to see is that break of structure, right? Market is in an uptrend, and then you want to see that strong move to the upside with a break of structure, creating that fair value gap, right? AKA displacement, and then that order block. And this is the 1-2 setup that we talk about inside of Pro and VIP. When incorporating some Elliott wave theory into here, essentially you're trading with the institutions or the whales, as we like to call them, right? Because there's so much volume here. There's so many orders being filled to push the price up, but the big players can't get all of their orders filled in one go. right? Because there's too much money going into it. So what are they going to do? They're going to push the price back down, fill the inefficiencies, retest that order block, and then push the price up. And we're still maintaining that bullish market structure. We have not broken new lows. This idea is invalidated once price closes below this low. So I hope that made sense. I'll do some more training in the future. Maybe I'll bring J Money on the channel and we can talk a little bit more about the 1-2 setup. But it's very, very simple, right? You're looking for the same thing. You're looking for a bullish market structure, meaning you want to see a BOS plus or an MSS plus, right? This means the external market structure is bullish. Then you want to see that strong move up, breaking structure, and then a retest of the order block, filling those inefficiencies, right? As you can see, previously there was a fair value gap here, right? We had that fair value gap. We came down to fill the fair value gap, tag that order block, and price has gone up, right? This is a perfect example of the 1-2 setup that we teach, right? Now, we also have multiple mitigation methods for these order blocks, right? By default, it's going to be set for the wicks. That means price has to wick through the order block in order to make it mitigated. Now, there are multiple options. Like I said, a lot of you will like to use the touch, meaning once the order block has been touched, it's mitigated. As you can see, this order block had already been tagged by this candle. So in some strategies, that would mean that that order block is mitigated. Now we can do the close, meaning the candle has to close below the order block to be mitigated, which I would not recommend. We also have the average, which is the midpoint of the order block. I know some people like to use that as well. Personally, I like to use either the wicks or the touch, all right? As soon as an order block is wicked through or at least tapped, I don't want to take a trade at that order block because it has already been mitigated. It is no longer valid. But like I said, that totally depends on your strategy. We also have a few customizations here, such as toggling on the internal bull or bear activity, changing the colors. You can change the colors of the order block. You can make this text bigger, remove the volume, remove the percent. I'd honestly recommend leaving this at default. All right, below that, we have the market structure. So that's this BOS and MSS. So what does that mean? Well, a break of structure is a continuation of the trend. All right, let me say it again, a continuation of the trend. If you are in an uptrend and price breaks the recent high and closes above, right, has to close above, that is a valid break of structure. Now, a market structure shift is when the market structure is shifting. So whether it's in a downtrend and it's shifting to the upside, or if it's in an uptrend and it's shifting to the downside, we refer to that as a market structure shift. Now, there are two types of BOS and MSS. We have the internal structure and the external structure. You really want to be focused on the external structure. This will tell you what sort of trend you are in on a higher time frame, on a macro time frame. So you can see we're currently in this BOS plus, meaning we are in a bullish market structure. You do not want to be looking for sells if you are in a bullish market structure until you see a confirmed market structure shift. Then you can look for short positions. But I think most of you by now know what a break of structure and market structure shift is. Very, very simple concept. Now we also have swing points, which are toggled off by default. These simply show you the key swing points, right? Whether price is an uptrend or a downtrend. As you can see, we're making higher highs and higher lows, confirming that we are in an uptrend. This is not necessary. I know some people like to use the swing points. Personally, I think it clutters up the chart a little bit too much. I think you can tell relatively easy what trend the market is in. So personally, I don't use the swing points, but they're there if you want to toggle them on. Next, we have the fair value gaps. All right, so these are multi-time frame as well. So if you want to use higher time frame fair value gaps on the chart of your choosing, you can do so. But we've created these fair value gaps using the parallel channel, giving it this nice, sleek look, right? Very, very clean, doesn't clog up your chart too much. And the good thing about using the parallel channels is that you also have the midpoint clearly identified for you. Now, similar to the order blocks, we have multiple mitigation methods, right? I'd recommend touch for fair value gap. As soon as a fair value gap is tagged, it is invalid for me. Some people will use the average price, right, the middle. That's totally fine as well. It's strictly up to your strategy. You can also change the color of these fair value gaps, toggle on a max fair value gap. As you can see, we only have one major fair value gap currently. We had another one right here, but as you can see, it was mitigated perfectly, right? Price came down, filled that inefficiency to a T, and then price pumped. So fair value gaps are very, very useful as well. And I know a lot of you guys use these on a daily basis. So, all right, below that, we have liquidity levels. Now, I oftentimes talk about swing failure patterns, right? Swing fail of a key pivot. Now, we've identified these levels for you, showing you where the liquidity is, right? Price follows two things, liquidity and inefficiencies. So by being able to visualize where the liquidity is, right, where the active orders are, you can create a trading plan in your head and mark out your setups more easily. For example, if I'm looking for a swing failure short from here, I look to come up price to grab this liquidity, right, and then close back below, and that would be my short trigger. But keep in mind, we are in a bullish market structure, so this is where you have to use everything in confluence. But the liquidity levels are very, very helpful. Now you can also change the pivot length of these. If you want to show all of the closest liquidity levels, you can change the pivot point to 1, or the pivot length, I should say, to 1. This will show liquidity levels that are a little bit closer, and this is also multi-time frame as well, which is very, very useful. Now below that, we have the key levels. So we have the 4-hour key levels: daily, Monday range, weekly, monthly, quarterly. So this will show, you know, the daily open, the daily high, the daily close. And we also have this shorten feature. If you want it abbreviated, you don't want that big text, you can simply toggle on the shorten feature and it will show your daily open, previous day low, previous day high, etc. I do love the Monday range. I find trading the Monday range is very, very useful, especially if there are other confluences. As you can see, we have a Monday mid right here, as well as a liquidity level and an order block. So this would be a good level to look for a long position on a lower time frame, and obviously the Monday low as well. So if we were to see some sort of swing fail of the Monday low and then a reclaim into this order block, that would be my long trigger. It's very easy to develop trading plans in your head with this indicator because it gives you so much information and so many key levels to take trades at that you'll always have a trade in mind. There will always be some sort of setup that you can form using this indicator, which is great. So I think the key levels are pretty self-explanatory. Below that, we have the session levels. So for all of my Forex traders and even my NQ traders, right? Even my crypto traders, I know a lot of you guys use the session levels. We've added this onto EzSMC. So if I wanted to toggle on the London levels, it will show you the London open, the London low, and the London high. Now this is obviously for a lower time frame. I'm on the 2-hour, again, to help you find trade entries. And below that, we have the premium and discount zones. I really don't use these too often, but it does a good job of letting you know where price is on a macro time frame, on a little bit of a higher time frame. So you can see that we are currently at a premium zone, right? A premium zone. That means you're going to be looking for short positions. If anything, you want to wait for the equilibrium, which is the middle here, or the discount zone. As you can see, we've rejected from this level before. You could look for a long position from this zone. Now, I don't personally use the premium and discount zones. You can change the look back. You can also throw on the labels if you want, right? The premium and discount equilibrium. I'm honestly not a big fan of these premium and discount zones. I think the other features are a lot more useful, but I know a lot of you guys use these. And this is a very basic SMC term, right? Premium and discount zone. So we've thrown it into the EzSMC beta. Now keep in mind, this is a beta version of the indicator. We are already working on some new updates right off the bat based on user feedback. So we are constantly improving our indicators. Now I want to show you one last thing in the alerts up here. So we have pretty much any alert you can possibly imagine. We have the bearish break of structure plus, that's the external. We have the order blocks, fair value gaps, market structure shift, high liquidity levels, low liquidity levels, pretty much any alert that you can possibly imagine. So a ton of alerts here. Well, that's it for the EzSMC beta version. Now, I'd highly recommend, if you don't have a basic understanding of smart money concepts and the terms that I'm talking about, to do some research on your own. Now, we're going to come out with a ton of education for you guys who don't know what smart money concepts is, maybe have only heard about this a few times on some YouTube videos, but don't really know about it. We're going to be releasing a lot more strategies, a lot more education using this indicator, but I highly recommend doing a little bit of research on your own first, because it will take some time to get. These concepts are pretty foreign. And for my smart money traders, you guys are going to have a blast with this one, especially for my Forex traders. This literally works killer. Let me go to a Forex pair here real quick. Let's go to Euro USD. I mean, it really does not get much cleaner than this. We had a previous order block here, tapped into it, went up. Market structure shift, had a fair value gap here, was filled. Current break of structure, price is going up. So I'd be looking to take a long position here on Euro USD, maybe fill this fair value gap, bounce into this order block, and look for a long position targeting this liquidity level right here. And there will be more strategies posted in the next coming days using this indicator, so be on the lookout for that. That's it for me. If you guys enjoyed this video, feel free to leave a like, subscribe to the channel for more trading content, and I'll see you guys next video.